Thanks for joining us. I'm Marlon Bowling with you, your tour guide to the ag commodities. Let's dive into the grain trade here and get you updated. On the corn board, we've been a little bit lower, we've been a little bit higher, now we're a little bit lower again. Let's go ahead and take a look at what's going on here with our corn prices direct from the trading floor in Chicago. So on the corn, we have December trading a penny lower now, at $3.74 1/4. We had a little bit ago gotten as high as $3.76 1/4, at least earlier today. We have the March now a penny lower at $3.86 1/4. It's just not budging very far today. Soybean trade, let's take a look. We have the soybeans on the November back to unchanged at $8.84 3/4 right now. January down a half cent. And on the wheat market, we've had a lot of pressure this morning. And it's actually extending the pressure to the downside. December Chicago wheat down 7 1/4 now at $5.16 1/4, only one tick from our low of the day. That's off its overnight high by over 8 cents. And in Kansas City wheat, we have December now 7 1/4 lower at $5.20 3/4. That also about 7.5 cents off of its overnight high. Let's take a look at Minneapolis wheat. December currently down 7 1/4 at $5.16 1/4. Scott Gecas is at the edge of the trading floor there in Chicago, where all the trading is taking place. And Scott, thank you so much for joining us. Scott happens to be with Longleaf Trading. What is the talk on the floor here this morning that may or may not be driving this grain market activity so far?
Yeah, I mean, with the soybeans, they opened up a little bit lower, or opened down a little bit lower. Now they're up. They're just waffling back and forth, going back and forth. One of the things I do want to talk about in the soybeans is the fact that we had 2 cargoes shipped to China. So what is not being talked about too much is that those shipments were being placed before the tariffs even took into consideration. So Monday, they had a cargo shipped that was canceled, and that was the 4th cancellation in 4 straight weeks, and that was a cancellation of about 188,000 soybeans. So, yeah, it's still going back and forth. The 2 cargoes that were on the way to China, those were before the tariffs. So people are putting a little bit of emphasis on those 2 because they actually went out. But the fact still remains that they went out before the tariffs were even in place. So it's a double-edged sword if you're looking at it like that. Either way, China still has to get something done with the soybeans. The Brazilian soybeans are trading at about 26% over U.S. soybeans. So going to Brazil, they're going to end up spending more. It just depends on how this is really going to play out. And as far as the support and resistance goes with the soybean market, we're keeping an eye on that 875 level. That's a very key support level.
Well, we have some things going on in the outside markets today, too, and I want to visit with you about that when we come back here, Scott. Our guest is Scott Gecas, and we'll be back right after these messages. We'll take a look at livestock and the dollar. You might be surprised at what's going on. Hot off the wire, we have some new ethanol production numbers. Wanted to share them with you here right off the bat. And so anyway, we have our first look here for ethanol production last week. It came in at 1.011 million barrels per day. That is down 29,000 barrels per day from what we had the week before. 4-week average on ethanol production now at 1.026 million barrels a day. That is down 10,000 barrels a day. The ethanol stocks gained 100,000 barrels. They now stand at 24.1 million. The imports are back to zero, though, for this past week. Those are brand new numbers for ethanol production. And likewise, we're talking with Scott Gecas, by the way. He's with Longleaf Trading in Chicago. And like these ethanol numbers that just came out, Scott, we also got some crude oil inventory numbers, I guess, as well. And the market has just really, pardon the pun, but gone in the tank here the last few minutes here.
Yeah, with the oil numbers in particular, it's a build about 6.5 million barrels. So that was a little bit unexpected, and that's why you're seeing a big drop in oil right now.
A big drop in the Dow Jones Industrial Average, over 300 points when I checked a little bit ago, but the dollar is sharply higher today. What does that mean for this livestock trade? Let's take a look at live cattle in the feeder cattle market. Sometimes when you have the stock markets dropping like that, that can be detrimental here on the cattle trade, and it is lower. We have December live cattle cattle down 65 at 117.13. You have February down 70 cents at 121.13. Both of those just one tick off of their low of the day now. And if you look at the feeder cattle market, we currently have November down 67 at 153.55, only one tick from its low of the day. And January is on the low of the day at 149.05. That's down 90 cents. Can you attribute any or very much of that to what's going on in the stock market today?
Not really. The protein complex in general across the board has been extremely resilient. I think that is due to just all the strong economic data that's been coming out. Strong jobs number, more people at work, consumer prices, consumer confidence at all-time highs. So that is definitely playing an effect of a bullish catalyst in the protein complex. However, you're still running into big supply concerns. Cheaper feed to feed the cattle, it's going to contribute to higher weights. Higher weights is adding to supply concerns already. Fourth quarter production is already expected to rise when typically it drops. So we are keeping an eye on that 117 level. If it breaks it, we should see a little bit of a follow through, a little bit of spike in volume. But until we break that 116 mark, that's the absolute floor, the key support level. If we break that, you're going to see a big spike in volume, a big spike in volatility.
December 63.17. Any quick thought on the hog trade?
Yeah, in the hog trade, the biggest news story in the hog trade is the African swine fever. It's definitely a huge concern. They cannot control it. It's already hit 40 different places. They're starting to put bans on imports. If you remember, when it first started coming out, if they said if it affected 10% of the herd, it's going to affect, that was the total traded pork in the world last year. Now, it's very clear that this is already over 10%. It's continuing to spread. It's not being controlled at all. So until these exports show up, it's going to be really hard to see any type of a drop in the hog market. But as soon as we start seeing those exports show up, you're going to see a big spike in price.
Thanks, Scott, for visiting with our audience today. Scott Gecas with Longleaf Trading in Chicago.